It makes sense because of the things that they're allowing. I mean, yes, it shouldn't make sense because stock buybacks should not be a thing. Infinite quantitative easing should not be a thing. The Fed money printer should not be a thing if we were a true, capitalist free market. We're none of those things. That's just the reality of it is that, we have cronyism. We don't have capitalism. A fortunate few who know the right people are going to make a ton of money and they're going to artificially inflate stocks to the point where they can make insane amount of money. But the thing is, knowing that, sadly, we have the opportunity to ride that with them. Nothing's stopping us from buying these stocks that are clearly being bought back and inflated. It is what it is. You can take a stand for sure, and I don't see a reason not to, but you can't take that stand and expect that it's going to be your retirement. They're two different things, right? You can make a principled stand and buy Bitcoin and hold Bitcoin and whatever, but then you can't be mad if you don't have enough money to retire on when you could have had like a 401k with your job and they would have matched everything that you put into it, right? I mean, those things aren't going to exist, unfortunately, for our children, even for us. If we had a job at this point, I never had a job with a 401k.
Well, it's the equivalent of the 7-8% savings accounts that our older generations used to have. Like they used to have that. We have free money being given to you by your job, basically. Well, yeah, like you said, it's probably not going to last.
Every $1,200 that they give to someone, their children are going to pay back 12,000. Unfortunately, this is truly a scam. It's disgusting what's happening. Helicopter money from the printer is, I mean, in my mind, it's a purchased vote. It's like the minimum payment they can make to stop you from rioting. It's a payoff. You know what I mean? And it's disgusting. It really is. It's truly, truly disgusting. And, in principle, giving money is not disgusting to your citizens. Like they need help. I get that part of it. What's disgusting is that it's, like 5-10% of the money that they're printing is going to the 99.9% of people who really need it. And the rest is going to a bunch of rich hedge fund dudes and CEOs. And that's absurd. And not only is it absurd that that's happening, it's absurd that we've seen it happen before, like 12 years ago, and it hasn't changed. Like there was no lesson learned. There was no legislation. There was nothing. I mean, it's the same game over and over again. And each time they drain the people a little more and they fill their pockets a little more. And it's an endless cycle that only improves the lives of, 1% of the people.
Yeah, I think you're right with 99.9. I think it really only improves the lives of 0.1% of the people. I mean, you can argue that it does improve the life of everybody because we're not going into a depression, and then a depression would suck for everybody. But it's totally unfair, and it's a scam because they're taking most of the money and giving it to corporations who are the ones that took too much risk and did the stock buybacks and got billions in bonuses and stuff. And they don't have to give any bonuses back.
American Airlines, 96% of their available cash flow was used to buy back stock and raise the price of the stock. 96% of their cash flow within 1 month, they needed a bailout. They didn't have enough cash to operate for 1 month. They needed a bailout from the government when they spent 96% of their cash buying back their own stock.
And all their executives keep their bonuses and everything that they got from this. So it is a bit absurd, even for the fact of knowing that this is a Ponzi and everything. Like, that's why I'm hesitant to think that this is going to continue. Like, I was one of those people that were wrong about the markets in general after 2008. I was like, I got to get some gold or silver or something so that when this all falls apart, I can buy food. I was one of those people. I'm, mid-20s or something like that. Know nothing about stocks. I'm like, how is this going to work? They're just making money from nothing. All these companies are bankrupt. This can't work. I'm not going to buy any stocks. And then obviously, like watching the scam happen, it makes sense why it's up for sure. But do we think that it can continue this like for another 10 years? I mean, yes. The answer. But what do you think the chances are that a purge will happen and people will revolt against this and it will go down and there will be like a 90% drop in these companies?
The companies maybe, but I mean, the real use case for Bitcoin or for discussing crypto isn't really the stock market dumping, right? I mean, a stock market dump is clearly bad for Bitcoin. You touched on it earlier. You said, I don't believe they're correlated assets. Well, I don't, because correlation is a mathematical formula created by Markowitz, and by definition, they're not correlated when you do that mathematical formula. That said, Bitcoin is a risk-off asset, right? and it's controlled by very few. So if three dudes are getting margin calls in the stock market and have to sell all their Bitcoin, that moves the Bitcoin market, right?
For people who don't completely understand what you just said there, they're listening maybe, risk off, can you just say what that means?
Yes, it basically means it's one of the first things you sell. It's a very risky asset. And when people need cash, they sell the riskiest assets first. So I don't think that anyone has made a very compelling argument that Bitcoin would do exceptionally well price wise when everything is selling off. I don't think anyone believed that. I think that Bitcoin is a hedge for the money printing and hyperinflation and what comes later, right? So Bitcoin dumping is not unexpected, but by definition, that does not mean that they're correlated assets per se. It just means that they all dumped at a certain time. And since then, things have sometimes been trading sort of together and sometimes they've diverged and whatever. It's sort of a different conversation. But
Well, it's a good one to have because there's a bit of debate about that, and the way I think about it is that Bitcoin maybe it's the definition correlated that you're saying is like a specific like mathematical
you
term.
can compare any two assets for correlation and it goes from -1 to 1. Most people probably don't know this, but it's an actual formula. So you can take any two assets, put them in this formula, price, whatever. And so -1 means inversely correlated. So like if one goes up 10%, you would expect the other to go down 10%. If it's a one, they're correlated assets. One goes up 10% or also goes up 10%. Zero is completely uncorrelated. So whatever one does, it has nothing to do with what the other one does. So Bitcoin for the last decade has been like a 0.16, completely uncorrelated. That's also true since 2016 or 2017, mathematically uncorrelated, almost no correlation. You can't find another asset that's more of a free market and more uncorrelated than Bitcoin. So even Binance did a study. So even in the huge drop, March 12th, all of that, the highest correlation between Bitcoin and the market reach was 0.58, which by definition is moderately correlated. And that's still less correlated than almost any other two assets. So yes, you can say there's some correlation, but by definition to me, and I'm a stickler for kind of rules like that. So yes, they're not correlated. Like there's a way to define correlation.
I guess if you're thinking about it in terms of like managing your money in a portfolio and you're using portfolio construction theory or something like that, this is a non-correlated asset.
Right, that's modern portfolio theory from Markowitz. And what people don't realize is that, like, if you're talking about it in financial terms and in these terms, is that you can add an exceptionally risky, ridiculous asset to your portfolio, but reduce the risk of your portfolio. It seems counterintuitive, but finding an asset, even if we view Bitcoin as super risky, it's volatile, it goes nuts, it may drop, it may be more likely to drop than go up, but you're reducing the risk of your overall portfolio by finding something that's not correlated. Because even if that happens, it's not for the same factors that the rest of your portfolio rose or fell. So it's called idiosyncratic risk. Almost everything in the world has systematic risk, almost every asset. There's really not that many kinds of assets that you could even trade or own. And even like the subsets of those assets basically come back to the same sort of core ways you evaluate them or the reasons that they move. And Bitcoin does not move for any of those same reasons fundamentally. So even if you think Bitcoin is a piece of shit, you should own it. It's true. You have found something that's idiosyncratic. You should have it in your portfolio because I always say, like the Mad Max scenario where the world melts and that's the one thing that rises. At least you had enough of it in your portfolio to survive.